Hey everybody, so I wanted to take a look at PayPal earnings. So in the after hours, they are down a little bit. So we're down about $4-ish. So that's about 5.4%-ish. So PayPal is down. So let's go ahead and let's actually crack into their earnings release. So right here, we're looking at the first quarter 2023 results. Let's go ahead and let's look at the Q1 highlights right here. I'm going to zoom in just a wee bit. All right, so right here, we're looking at the GAAP metric. Always look at GAAP because non-GAAP, they're adding things back in like stock-based compensation, depreciation, whatnot. So if we're looking at GAAP right here, net revenues, this is 7.04 billion, so that's up 9% year over year. Operating income, that's 1 billion, so that's up 41% year over year. And earnings per share is 70 cents, so that's 61% year over year. So it looks pretty good. Okay, so why are we down? Let's go ahead and take a closer look at the income statement here. So let's see. We want to look at Q1 2023. We're comparing to Q1 2022. Now, if we're looking at net revenue, 7.04 billion versus 6.48 billion, that's a 9% year over year growth. Operating margin 14.2% versus 11%. That is an increase as well. Effective tax rate. So this is a little bit higher right there. You can see it's 26% versus 19.1%. Obviously, you want less tax. Now, if we're looking at net income, we're looking at 795 million versus 509 million. Earnings per diluted share 70 cents versus 43 cents. So everything looks good so far. Now, if we're looking at net cash provided by operating activities, that's 1.17 billion versus 1.21 billion. So, the cash flow is kind of going down a little bit. Now, let's go ahead. Let's look at the guidance. See what they said for guidance. So, PayPal, they're pretty generous with their guidance. They give us the next quarter guidance as well as the full year guidance. So right here for Q2 2023, it says net revenues expected to grow 6.5% to 7% on a spot basis and 7.5 to 8% on a foreign exchange basis. So that's basically saying, hey, you know what? We are going to have foreign exchange tailwind. So this is a good thing. So that's why the net revenues are expected to be higher when we're looking at the foreign exchange rates. So that's a good thing right there for them too. So they got foreign exchange tailwinds. Now, GAAP earnings per diluted share is expected to be 81 cents to 83 cents. So let's just take the mid. Let's say it's 82 cents. And we're going to compare that to negative 29 cents in the prior year. So that's looking much, much better. Apparently last year they had a pretty bad Q2. So now maybe it's in the full year 2023 guidance. So so far I see the Q2 2023 guidance looks pretty good. So if we're looking at the fiscal year 23 guidance, it says GAAP earnings per diluted share is expected to be $3.42 compared to $2.09 in fiscal year 2022. So that seems pretty good as well. But let's go ahead and let's double check something. So right here, I could get $3.42. That's going to be the full year. So what I'm going to do is I'm going to subtract their guidance for the next quarter, which is 82 cents. So minus 0.82. Now let's go ahead and see what we did this quarter. So this quarter we did 70 cents. So let's subtract 70. Oh, oops. Let me add 7. I didn't mean to do that. Minus 0.7. All right, so they're essentially expecting to do $1.90 of earnings per share for the second half of the year. So that's actually not bad either. So, you have to wonder, okay, well, why are we down right now? What is the market sniffing out that we're not sniffing out? Because so far, on an earnings per share basis, this looks pretty darn good. Their Q2 guidance is going to be higher year over year. And their fiscal year 2023 guidance is going to be higher than their 2022 year over year. So, maybe it's in some other data. So we could scroll down a little bit, see what other kind of metrics they give us. So I'm just going to scroll down a little bit, way past these financial statements. see what we're missing, because we're missing something. The market always knows something. Alrighty, let's see. Oh, okay, so right here, they're actually giving us some other data right here. So this isn't necessarily financial data. So right here, we can see active accounts. If we're looking at March 31st, 2023, so this quarter that we're reporting right here versus the last quarter, you can see right here that the active accounts is actually going down. So last quarter, they had 435 million active accounts. Now they have 433 million active accounts. So this might be a metric that's causing us to be down in the after hours. So yeah, I mean, if we're just looking in the past as well, we're looking at September 30th of 2022, right here, we actually saw this number grow. And, we're seeing this number grow right here. So if we're looking at March 31st, 2022, this number is 429 million. Then in June 30th of 2022, that number is 429 million. So it didn't really change from that quarter to that quarter. But from this quarter to the September quarter, it went up 3 million. And then the September quarter to the December quarter, it went up another 3 million. But here in the December to the March quarter of the new year, it's going down by 2 million. So maybe this is what the market is sniffing out. So also, if we're looking at the number of payment transactions, this went down as well. So we can see that we were seeing growth right here. So if we're just reading right to left, we're seeing growth. So growth, 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 decline. And let's see, what else? Payment transaction per active account. This actually went up. Okay, so some interesting stuff here. So, maybe this is what the market is sniffing out. I'm not entirely sure. But overall, I thought that the earnings were pretty darn good. The revenue, the revenue growth isn't amazing. It's nothing amazing. But the earnings per share, it's definitely kind of getting much, much better than where it was in 2022. In 2022, it looked pretty nasty. Now we're getting back to, let's see, what were they projecting again? Let's go back up. So if we're looking at the full year projection for 2023, we're expecting GAAP earnings per share to be about $3.42. So yeah, it's much higher than fiscal year 2022. Now we could do one quick calculation right here. We could do the PE multiple. So right now we're at 75.52. So let's do 75.52. Let's divide that by the guidance that they're giving us here of $3.42. So divide that by $3.42. And we have a PE multiple of about 22. So you might even argue, hey, you know what? This is kind of high because, we're looking at the stock that has a pretty cruddy revenue growth. I mean, their revenue growth isn't all that great. If we're just looking for their quarter, their year over year on the quarters, they're expecting like 7%ish. So that's nothing amazing. But you have to keep in mind that in this environment, that's actually not too bad because we're looking at companies like Apple and Microsoft and Google, and hey, you know what? Their revenue growth isn't all that great right now either. So I hope you guys enjoyed this video and have a good one.